I'll make sure I stand for can go back.
All right, guys. Good evening, ladies and gentlemen. I don't know if you have any ladies here, but even if we don't, well, we are going to be talking about dollar index today, and the reason why the market has been very, very volatile for the last few days. So where we'll have a horizontal line, right? I don't know what's going on, but on all the teachings that I've been indoctrinating on you guys on how to approach the market the right way and with the right mentality. I believe we had a conversation about dollar index on our previous classes, and we have been talking about USD JPY collapsing aggressively on the entire month of January, starting this month as well. Now, if you paid attention on that, you'd see that something is really going on in this market right now, because normally something is going on in this market right now, and you will notice that it is being institutionally sponsored, because seeing the aggressivity of these market sells and the way the market has been moving lately, you should understand that these are institutionally sponsored. Now, a lot of you people a lot of people wonder what is or what gives me the multiple confirmation for me to be able to hold my trade for a long duration, for a long specific period of time. And we should also you should also understand that I've been doing this for a very long period of time as well. And I'm not a scalper. I'm an intraday trader. So I can hold my trades for days, depending on the overall direction of bias. Now, today, I don't want us to do a lot of teaching, but I want us to do a little bit of breakdown of what has been going on in the market today for the past weeks. And so that you understand, I shouldn't just be teaching every single thing, and we don't even really grasp that you cannot go into the market and really do the top-down analysis on yourself and understand what price action and enterprise delivery algorithm is all about. So the dollar index gap and it opened aggressively. Same thing happened to AUD USD and a lot of other USD, a lot of other foreign currency pairs. It gapped aggressively. I mean, I lost a lot of money when this market gap, truth be told. I lost a shit ton of money, and I really felt uncomfortable because I had a slip race in my brokerage company that my stop was tight, but then I don't understand how that gap actually added into my equity and literally took me out way more than they should have. They should have hit my TP and stick to it, but then it ate into my profit. And that was really, really uncomfortable for me. And that's the reason why I had to double down. And I had to I had to double down on the sell on USD JPY. As you saw, I went in aggressive, and my stop too was tight, but then you see how the market never came back to that position. So it's a lose-sum game, but understanding the risk to reward parameters and how you execute trades and exit trade actually in a specific point is the key that will lead towards your consistency, and notwithstanding the dedication that you should have as an individual Don't look at the result now. Don't look at all those things and think that you're going to have all those results right now. No, it wouldn't come right now. It will come over time. Okay. So dollar index gap, and now we know in every gap, the market has created a liquidity void, a gap that the market needs to come and fill. And most of the time, sometimes it will not just come and fill instantaneously. Sometimes it will gap and you keep buying above, especially if you have a run in liquidity on a previous high that the market once created, or reaching out to fill a fair value gap. So the market gap actually on these, it reached out on this previous high and it started collapsing. Now, on our previous class, I was explaining something very important for trend traders, right? I took this example for a bearish. We're explaining something about the market maker trap trend line phantom. And we took this bearish trend as an example for the market maker trap trend line. Now you would see that the market was on a bearish trend for these. You would see that the market has been on a bearish trend for this period of time. So the market was selling aggressively from here to here, right? Now, retail traders, actually, they keep in mind, they'll think that what is happening now will keep happening till forever. So they'll keep shorting their position when the market hit the imaginary diagonal line that they have in their brain, which that imaginary diagonal line on a downtrend would be something like this. Something like this, that every time the market hits this area, it sells, right? That is the imaginary diagonal line. And now their stop should be somewhere around the previous high. So anytime the market hits this area, they sell. But now look at what happened here is the market hit and break the structure from these previous high. It came back. Retail traders were doing what they were accumulating more sell all the year because they think that the market was going to keep forming a lower low and a lower high since it's on the downtrend. But now what more happened is the market came back and retested the bullish order block formed here and it bought aggressively above. And I think I really emphasize on this, and I said that when the institutions want to buy, they buy real quick and very rapidly, and they don't give you the opportunity for you to be able to capitalize out of it. For you to be able to capitalize in it. This is what happened. Sunday market opening, the market literally gapped aggressively. It didn't even give people the opportunity for them to be able to enter into this trade, but it gapped aggressively to the upside. But now as an institutional trader, what would you do? You would look at the left-hand side and see that all the stop loss that were resided on the previous lower high that were being formed on this downtrend has been run out. Now, where do you think the next liquidity should be, or where would the market needs to go? The gap that it created should be a point of interest. So when the market starts selling, where you take your first take profit is when the market fills this gap that it created when you bought coming Sunday market opening. Now the market bought and filled that gap. Any retracement to the upside should be seen as a bearish sell opportunity for you as a retail trader. If the market buys above, you exit, you enter another bear position, and you head for the low that it created while buying above. Now, remember we had a similar situation here, this gap, but then the market filled it to the weak before buying aggressively. Now the market has dropped down and filled that gap to the tip. Right now, this imaginary diagonal line where traders think that every single time that the market hits this area, it'll keep going down. I told you, I took a typical example. If you are a trend trader and you want to position yourself as an institution trader and be able to catch most of this move, count this with me. When the market starts a bearish trend, you count 1, 2, 3, 4. After the 4th high is being formed, any retracement to the 4th high should be seen as a bullish opportunity for you to buy this market heading for the buy stop residing on those previous highs that the market created on the downtrend. Take an example, even on a bullish trend, you will notice that most at time, the trend made one first high, second high, third high, and the fourth high. The fifth drop should be a bullish opportunity for you, and the reverse is the same for an uptrend. Now, this is for dollar index, right? Now let's go to USD. USD JPY. USD JPY has been selling for the past months, right? And on our previous class, I think every single time I had a class, I was referring to this pair and making you guys understand that this pair will still collapse even way more than it is right now, because there's more sell side liquidity than that the market needs to correct before any switch in market structure. Now, speaking of which, when I was talking about the enterprise delivery algorithm, right? Speaking of which, if we want to talk about IPDA here, right? You go like, when you want to talk about IPDA, let's see how last week closed. Last week close was crazy. Last week closed with the market forming a nice long week on the weekly time frame, right? But now the weekly time frame actually not even there, but let's go to the monthly time frame even. I want to explain something to you guys for you guys to be able to understand. All right. Now this month, first of all, we are on the monthly bearish order block here, right? Now this is the higher time frame that we are taking our confirmation off of. Now that's the reason why I've been shorting this market for the past, and I'll be shorting this market from January, February, March. I'll be looking for more sell opportunities on USD JPY, right? Because speaking of interbank delivery algorithm, the interbank delivery algorithm states that we have a shift in market structure every quarter of the year, right? Now every quarter of the year, this is September, this is October, November, December. January, this is again October, November, December. And this is October, November, December. This is September, August, July. September, August, July, right? Now, when you notice, one thing you'll notice is every quarter of the year will have a shift in market structure. So these last 3 months were bearish, the next 3 months was bullish. And what do you think will happen on the next 3 months? Bearish. Now, when the market should be bearish, where do we have our liquidity that the market needs to be reaching out for? The lows. And when the market is bearish, the bullish order blocks fail and the bearish order block are being respected. I think we spoke about this already. Now, that is when you know which order block to be using to trade off of and which point of reference on which liquidity word is more likely to fail compared to the others. Now, a lot of people sometimes when you trade order blocks, sometimes your order block fails. You don't understand why the order block fails or why the mitigation block fails or why the breakup blocks don't respect themselves. It is because you don't have the overall higher time frame directional buyer perspective, right? Now, this has been selling. Now it has found support on the monthly bullish order block where the market is at right now. So we could see some potential retracement to the upside from this point in the market right now. Now let's take our horizontal line and we'll put here where we'll have the monthly bullish order block right now. Right? You see that the market filled it to the tip and then it started rejecting slowly. Now we'll go to the weekly. On our weekly time frame, look at this. It filled the monthly bullish order block to the tip and it started rejecting, right? Now, there is still a gap here that I want to see this market fill. But even if it doesn't fill it, we could see a retracement to the upside because there's a lot of stop loss residing here for us that have been selling this market that probably we could see some nice retracement to the upside. If we want to see a nice retracement to the upside, there's a gap somewhere around these highs that I want to see the market tap into that before some aggressive sell. Now, when we go to the daily time frame, the daily time frame has taken out the daily low. Now, since the daily time frame has taken out the daily low, there is a lot of liquidity residing here that there's a huge possibility for this market to buy back towards those buy stops, or it could keep selling towards selling through this monthly bullish order block, or sell again below these below this daily low that it just created here and bounce off of this mitigation block here to push back above. Now, one of which we need to see or abstain ourselves and stay out of the market to see which one would play first. Now, this is not the time for you to rush in the market. That's the reason why sometimes it's good to have good trades, and you can have one trade and it's the only trade that you can get for the month. So the market sold aggressively today, and I knew that this market was going to keep selling because of yesterday closing candlestick. Yesterday closing candlestick was a confirmation for that the market was to be bearish for the whole of today. And I don't know about tomorrow, but we're looking forward to see what tomorrow has in stock for us. So a sell below this area, we could see is that the market find a lot of resistance, like a lot of support here, finding a lot of difficulties breaking the support that it has here, and it start pushing back above, building more bullish momentum. And when we go to the 4-hour time frame now, we want to see what the 4-hour time frame is doing for us. We're on a 4-hour time frame bearish order block here after taking this stop. So this accumulation was accumulating more buyers in the market, thinking that the market is going to keep buying, and the market did what? Collapsed aggressively. So the market dipped into this area, a very sensitive point in the market right now where we have the monthly bullish order block here. Now we want to see how the market plays out here. Will it accumulate before doing a fake move and buying above, or will it still accumulate and distribute lower? Now, this is where smart money is actually trying to build more contract, bringing more liquidity in the market, seeing that they've taken out a lot of liquidity with the sale that has been going on in the market since yesterday. So we could actually experience some accumulation here and a little manipulation either to the up or to the downside for us to be able to anticipate where exactly next the market is more liable to go at. So go to the 1 hour. On a 1 hour time frame, a lot of people were trying to buy this market to the upside. Meanwhile, we were shorting this market aggressively. Why should you be buying a market when the market is on a downtrend? First, why should you be buying a market when you don't even understand what is driving the market liquidity to begin with? Ratings, Mr. Murphy, William. So that is actually the #1 aspect that gave me the entry in this my trade, because the market bought, right? The market bought. I was actually bearish on this trade ever since if you've been attending our Zoom call, you would understand that you understand what I'm talking about, because I have literally been emphasizing on the bearishness of these specific pair, right? And it's not surprising the bearish market that we experienced the last few days. So When the market sold here, I missed that sell opportunity, right? And when the market bought back into this area, this was my entry point, my initial entry point, truth be told. This was my initial entry point. And this was my supposed to be stop loss area. But now I had missed this movement. That's why I entered my sell somewhere around this area. So I missed this movement, and my stop was supposed to be on this previous side, because if the market is about to push lower, there's no reason for the market to break out this high. So the market actually did that. It came above, it bounced off of these nice 1 hour bearish order block, right? And then the market pushed below. And when the market pushed below, actually, there was another confirmation that gave me another reason for me to be able to hold this trade for the whole day of today, right? Now that reason is when I go on a 4 hour time frame. The 4 hour time frame. Now a lot of you guys would have been buying here thinking that this is a swing to buy at the upside. But the number one aspect or the number one thing that controls the market, and I always emphasize on this with you guys, the number one driving factor that controls this market is liquidity. All right. Liquidity, which is your stop losses that are in this market. That is what the algorithm is looking for. That is how the algorithm make money, right? So we had sell side liquidity that the market needed to reach out for, which is what the market did. So this area where we saw the market facing, like bouncing off of an imaginary diagonal support line, was just the market trying to build more stop losses below this area for them to be able to buy into it. So when the market did that, a lot of people were buying this market and their stop were residing somewhere around this low or below this low. That's why we had to run through this low, and the market came back, retested this low, and pushed back even lower. So when I missed this entry on a 1 hour time frame, this 4 hour closing candlestick was the entry point for me to be able to enter my sell position. Now, when the market started selling, that's when I took my sell position somewhere around that area. Now, when I go like to the 30-minute, right, I'll refine the trade and I go even to the 30-minute and explain why I put my stop loss tighter than I should have. The 30-minute was not that clean. And the 15-minute as well. Take the 5-minute. Great. On the 5-minute, when I saw this low being taken out here, the market came back. The bear pressure was a lot, so the market didn't have any reason to push back above. Now, when I took the sell position here, my stop loss was on this previous 5-minute bearish order block candlestick, thinking that if the market breaks this area, even if it hits my stop loss, I will look for another sell opportunity above this area and still short the market. But fortunately for me, the market didn't reach out for my stop loss, and it just started selling from this point. And from this point, the market has been selling, and it has been selling, and it has been selling, and it has been selling till where we are right now. So right now, I think what we're going to let's measure this in pips. This is 300 pips. Easy. What if you can get one trade per month that can give you 300 pips? Can you make a living with that? Can you make a living with that? What if you can get a trade per week, 100 pip trade per week? Can you make a living with that? What if you can get 70 pips per week? Can you make a living with that? Don't think about the monetary aspect of it. Think about the pips and think about the risk to reward and think about the long term, how after you've built confidence in your trading strategy, you would be able to capitalize on this same setup in the future that will be able to unfold and yielding more profit than it is not yielding for you right now because you don't yet have the confidence on your trading strategy. Will this be a good trade setup? If you had just one lot size on this trade, you would have made $3,000. Can $3,000 be good enough for a month? Can $3,000 pay your bills for the month? Can $3,000 solve a lot of, or one of many financial situations in which you find yourself currently? Let's be realistic and let's be honest with our own self. And don't head for huge expectation when you can't even handle the little things that you should actually pay attention to be able to handle them for yourself. But on the contrary, take the little that the market has to offer for you and understand that those little numbers add up over time. Look, I've been able to build accounts. I've been able to build big, small account right in front of your faces. I've built small account from $140 to $3,000, and I'll share the screenshot with you guys. I've built a lot of account, but it doesn't mean I bet a lot of account with you guys, but the thing that happened is I didn't took $150 to $3,000 on just one trade. No, I grow it slowly but surely, and adding up those little numbers adds up faster than you even think. And when you do that and you have the habit of paying yourself, you realize that one day you will have the big trade that will pay for everything else. That will pay for the time being wasted. That will pay for your patience. That will pay for your dedication. That will pay for your passion. That will pay for your sacrifices. That will pay for your sleepless night. That will pay for every single thing that you've been working for. But will it happen overnight? No. These things takes time, and that's the reason why a lot of traders don't like to hear like these things takes time. You want that mentor that will tell you that, oh, I'm gonna make you rich in the next 1 to 2 months. You're gonna be consistently profitable. It's a bloody lie. It's not gonna happen. I'm telling you the truth. It's not gonna happen. Even if you get lucky and make money in the first 1 to 2 months in trading, there's a huge possibility that you will lose that money all back in just a few weeks or months to come. Understanding these things require practice, requires a huge level of discipline, requires sacrifices, require back testing, require risk to reward parameters, require fundamental and technical analysis. It is the combination of these different aspects of trading that then create the masterpiece in you as an individual, and that will push you to find that trader that you are as an individual, because not everybody will be able to trade like me, right? Not everybody have that kind of patience that I have to hold a trade with 15 lots to unfold for as long as it takes. Not everyone had the guts to do that. But would you become a great scalper? Why not? Depends on you. Would you become a swing trader way more than I am? Would you become a better trader than I am? Of course, why not? The goal here is for you to be able to meet or to get your edge. The goal here is for you to be able to master or understand yourself, what suits you and what works for you as an individual. All right. If you don't have the patience to hold the trade for this long, 100 pip or 150 pip from this position to this position is still a lot of money. Now, even if the market dropped below this area, you're not part of it, who gives a shit? Nobody gives a shit, right? You make money, you kept it, great. what happened or what is more important in Forex is for you to be able to keep the money that you've made in this market. Because a lot of us, when we make money, we tend to give it all back in this market. We don't even enjoy the benefit or reap the fruit of our labor for the past weeks and months that we've been working relentlessly, trying to get a level of consistency or to be able to pay ourselves. But then we tend to lose back that same money in the market because of greed. Please, ladies and gentlemen, please be able to understand that the market is not your friend. When you're able to understand that part of trading, you will also understand that losing is part of the game. But what is more important is if I'm able to lose $50, my reward should be at least $100 or $150 minimum. That would cover up any losses that I've made, even if I am a bad trader, even if I have a very bad trading strategy with an accuracy of less than 50%. But if I have a good risk management, if I can manage my risk, and if I can be disciplined enough to be able to and also every trader that is on here today, whether you're here today or not, indoctrinate the habit or build the habit of paying yourself every week or every month in trading. I don't care if it's $50, I don't care if it's $10, I don't care if it's $100, but pay yourself, because there is an adrenaline rush when you are being able to withdraw something from the money that you've made in this market. It reboosts you in one way or the other, and it gives you more motivations. So try as much as you can to be able to pay yourself once in a while. Because before you realize, this is already February, before you realize we're in June, and before you realize again, this is December, and then time has passed and you don't have anything to show for it. And I'm not just saying this because I just want to say it, but I'm saying it out of experience. One of the things in trading is you don't even see time pass by, but then the time passes by real fast that you get really discouraged because you might see some of your friends progressing and you are still stagnant at the level that you are currently, and you feel very discouraged and demoralized, and perhaps you want to abandon it and go and move on to something else or something new. And I've been in that position, and I know what it feels like to see friends and your relative and other people in your life moving ahead in their career and every single thing that they have going on. You know, they are slowly progressing. And you get really demoralized sometimes. You know, you don't know what to do. You feel like you're doing something bad. Perhaps you are maybe doing something bad that you need to remedy that for you to be able to remove yourself from the position that you are. Or perhaps you're not, but you just need to submit to time. Because trust me, those good traders that you see out there, they have a minimum of 10 years or a decade of trading experience, which you don't even have 5 years or half of theirs. And this is the part where a lot of people don't like to hear about it. Trading takes time. I saw my guy Jade Cap post his profit the last time. He posted his profit of what, 300 and something thousand dollars. But guess what? He's been in this industry for what, 15 years. So it's very normal for him to have those results that he has. And you're in trading, you want to start making money the first year. There's a huge possibility that you will not even be able to make money in the first year of your first year of trading, because your first year of trading is a lot of learning, a lot of procrastination. You don't even have confidence in your trading strategy. You haven't even figured out who you are yet as a trader. This period is your transition period that gives you the room for you to be able to learn what works for you, for you to be able to understand yourself, your emotion, your mentality, how you behave on a losing trade, how you handle losses, how you come back after those scenarios. Now, when you all have all of these things coupled together, and then you've built and you've reached a mastery of understanding of which kind of person you are and how you can manage your emotion. If you are a good scalper, you don't have the you don't have the gut feeling to hold a trade over the night, because you get irrational, you suffer from anxiety. Sometimes you just want to collapse some of your position. It's okay. Everybody have their trading strategy. Don't force yourself to be someone that you're not. Now, this period actually gives you the room for you to be able to understand yourself, understand who you are, understand what kind of a trader you want to be, understand what trading strategy works for you more, understand your mentality, understand how you deal with losses, how you handle losses. And it's those little understanding that will, if you journal them, that is, if you put a journal, if you have everything written down, when you go through all your journal and you see all your mistakes and all your difficulties, it'll give you the possibility for you to be able to understand and redefine who you are as a trader and what kind of a trader do you think would suit you more, because you have raw data from your past experience that you can use as an example for you to take a decision based off of that and start working on that. Now, before you need to have this data, it takes time. It will take like 6 months, a year, because you need to fail, you need to try this and you fail, you try that and you fail, you keep trying and you want the two things. There are people that just trade by fair value gap in trading. There are people that just trade liquidity void. There are people that just trade liquidity run and they make money out of it. There are people that actually trade just bearish and bullish other block. There are people that trade just trends. And there are people that still trade just premium and discount market, but they still make money out of it. Why not you? But do you think it's gonna be easy? No, it's not gonna be easy. It's not gonna be easy. Ever since you came into our life, sir, damn, this business has been something else. Acquiring all this for free is absolutely crazy, man. Thank you. And God bless you. Looking forward to great things. Oh, you're welcome, my brother. Sometimes I wish I had the same. I had someone giving all these sauces for free also back in the days when I started trading, but I just keep seeing this every single time. Trading is not easy. Trading is complicated, and it becomes more complicated when you lose money and you keep losing money and you keep paying mentorship programs and you keep paying and paying over and over and over again. And I thought it wise to go about doing this free mentorship as from now henceforth. And all these videos that I've been recording, I will start uploading it on my YouTube channel. For those who missed it, for people that have friends, relatives that want good content and they don't have the money to pay for it, everything will be there available on our YouTube channel for free. You could be able to go there anytime. If you watch something you don't understand, you can go there and rewatch it. It will help you brighten your understanding. And your money don't interest me. It's not of big interest to me. But if you can use this information to your advantage and be grateful, and it helps you build, or you can take this information and do something out of it with your life, that is good enough for me. All right. I'm not selling signals. I'm not selling I don't have a VIP channel. I don't sell like courses. I don't do none of those things, right? It's not my objective. I just want to share what I know for the people that are willing to listen, and that's it. If you can get it and make something out of it, that's great. That's absolutely great. So thank you guys for always showing up. I apologize for missing